Because there is no secret sauce, man. No secret sauce, folks. There is no secret sauce. They are all charlatans out there. Alrighty, and today is Tuesday, May 26th, the day after Memorial Day weekend. And markets opened up Sunday night with a huge gap up, and they've still been up. We got the NASDAQ up 315. You got crude oil down to $92. Big move to the downside there. ES at 75.42, just off record all-time highs at 75.70 and change. It does look like the Russell now over 2,900, 2905, getting as high as 2920. Do we see 3,000 on the Russell? It's quite possible. And then I guess really the story of the day is the NASDAQ making record highs. It did break 30K. And it did break, I think it just barely broke 30K. Or maybe it didn't. No, it didn't. No. I mean, I didn't watch it. It doesn't look like it did. No. But it got damn close. 994.75. Pretty amazing, though, even though it hasn't. It's just crazy that the NASDAQ, we're talking 30K. And then, the Dow back up over 50K. I think it got to 51. Yeah, 51,212. So we're talking Dow over 50K again. We're talking NASDAQ 30K or damn close. And we might even be looking at a Russell at 3K. Just absolutely insane moves here on the equities. But, one thing that I kind of see as a little bit of a craw in the side, and I don't want to bust anybody's bubble, but I do have to say, though, although bonds have really rallied back and are trading at 112, they still have not gotten back into a place where I believe is going to continue to be good for equities. They really need to get up in this 115 area, and the yields need to begin to start dropping in here because, I'm even looking at it from my own perspective. You can go and buy something like BIL, which is the Bloomberg. It's the Bloomberg Treasury bill, 1 to 3 month Treasury bill. Things paying almost 3.6%. And so you can sit in cash with zero risk, with market at all-time highs, and get 3.5%, almost 3.6%. To me, that, starts to become attractive the closer that gets to 4%, and the closer the markets continue to make all-time highs, that trade actually starts to make a hell of a lot more sense, again, to me. And I know this isn't to the 20 and 30-year-old prop firm traders who are churning through fucking combined and evaluation accounts. I'm talking people with money, with actual real money in this game. I'm talking about, that becomes an attractive alternative to just being in the market at all-time highs. And at some point, that is going to hurt the stock market. Let's just face it. I mean, unless these yields can really begin to start to collapse a lot more, I'm looking at a bunch of cash just sitting there, and I'm saying to myself, do I buy stocks or buy many of these stocks at all-time highs? Or do I just go and throw it in BIL or SGov or something like that that's like a 1 to 3 month Treasury bill type of thing? And do I just throw it in there and make 3.5%, 4%? I don't know. I throw it in there. I mean, that's been my alternative even before all this. And so I think that's something that's not really being, I don't see it really being spoken about much at all. In fact, I almost believe that there's a conscious effort to divert people's attention to it. But I honestly believe that that is going to be one thing. So if there's something that's a canary in a coal mine for this market, it's the bonds. And I'm just looking at it from my own perspective that, look, I would much rather sit in cash 3 to 4% at markets at all-time highs than be buying this shit at the highs. You know, and what are you going to buy that's not really been making all-time highs? You're going to buy Snowflake. You're going to buy these shitty, you know, software companies that are basically just kind of value traps, in my opinion. The only one out of the ones that I follow that actually looks like I think is sustainable is CrowdStrike, because they're in a business in a sector that is very, very hot right now, which is, you know, cybersecurity and whatnot. I see a company like Datadog that has just exploded here. I just don't see how this is sustainable. I don't see how it's sustainable. I mean, I could be totally wrong. I mean, I've been wrong for a short time here, but you know, these are really the only stocks that have gotten beaten up that haven't participated in this move. And so what are you going to buy those? And I don't really feel comfortable owning any of these pieces of garbage with markets at all-time highs, because like you can't tell me that when the market decides to, you know, take a bit of a dump, that these aren't going to get hit as well. And so, you know, that's kind of where I'm coming from that perspective. And I'm sticking to the Walmarts. Like, I did buy some Walmart. I did get long some Walmart down here. I didn't do it in a traditional way. I sold some puts, and I bought a couple of call calendar spreads. I went over those here. And I'm also sticking to like Mr. Softy. I still like Mr. Softy down here. I think they have a little bit better earnings power than many of the other software / cloud providers as well. And so I'm sticking to those. But, you know, again, I keep looking at bonds and I keep saying to myself, you know, all right, great. Definitely pretty decent recovery off these lows. But until we get back up into this 115, we need to break out of this 114 right here. We need to break out of here. Right here. That's the spot. We need to get up and over this and then get into this area for bonds basically not to do damage to the stock market. And then that's really all I got on macro type of things. I mean, what are you going to do here? And here's the NASDAQ. What are you going to do here in the NASDAQ? It's basically, look, if you want to short the highs, go for it. A lot of people have been getting their faces ripped off doing that. It may work out once in a while, but you know, be my guest. I just rather not partake in any of those reindeer games. I just don't see anything that's attractive. I mean, you're going to buy the dip, and if there's any real dip in here to buy, it's going to be down in here, and that's kind of a ways away. You're talking a few hundred points. I don't even know if that even sets up. You know, and then looking at the Russell, same sort of thing. This thing's just, all of it. It's just, I mean, at what point do you just kind of, like I said, I've thrown in the towel to the point where it's like, all right, you know, look, I'm looking at these levels. They don't mean shit. They don't mean anything. You know, we're in a buy the dip market, and that is that. And so, you know, take that however you want. But as far as other things, I am looking at a couple of, let's take a look at, there are a couple of earnings, I think, this week. We do have CRM tomorrow. I don't know if they're before the bell or after the bell. There is nothing on here, but these are really the only, if we look at all the, I always like to look at all the earnings, but there's not likely many because we are getting kind of to the end of the cycle here in the earnings world. Do have Costco. That one could be interesting. Good IV rank there on Costco, 79. Up there, I see some of the dollar stores. AutoZone, that one's almost impossible. AutoZone is just an absolute garbage to trade. And again, AutoZone's problem is like what Amazon and Priceline before it became Bookings. And you know, when you're at $3,400 price, I mean, split the fucking stock already. I mean, split the stock if you really want to make it like something that people can do something with. You know, same thing with Costco. I wish Costco would do like a 10 for 1. You know, get out of these $1,000 fucking prices. They just make the stock just incredibly hard to trade and makes it incredibly illiquid. You know, add some liquidity to your stock and split it, but I don't know if they're going to. But that one likely may not be a bad one. And then we have AVGO. Definitely going to trade that one. That one's Broadcom. That one's actually been pretty good, but that's going to be next week. And that's really it. So you basically have Costco this week and maybe CRM. CRM's got a good IV rank. And that's about it. I'm not trading Hewlett Packard. That's a piece of shit. I never really had much. Traded it a couple times, not really to any benefit. Best Buy, another one, not real. I don't think I'm real crazy about that one either. So it really looks like it's just CRM. CRM and then Costco are the two that I would likely step into here as far as earnings. So those are some slim pickings. And outside of that, that's really it. There really is not much going on. And then there's a Walmart, which I still like stepping into long here on the good old Walmart. You can see here I went out to September and I did do a little, I thought I sold puts, but it doesn't look like I did. I did a 115, 120 call spread in Walmart. I thought I did. I guess maybe I never got filled. I guess I never got filled. I thought I did put on another Walmart position. But, and the reason I would sell puts here, especially at 41, Ivy rank still relatively high. Like Walmart, you can see, historically runs at about 20. And so it is a little historically high at 41. Again, not off the charts, but definitely historically a little high. So it is definitely a place where you can possibly sell some puts. I think if I did sell some puts, I would do it in July. And I would sell either the 15s, the 115s, or the 120. I'd probably do the 120s. I would probably do a 120, 110. A 120, 110. You could probably still do the June. You could still do June. Because June seems to have a little bit better implied. Although the implied is definitely very low. What's a June 115? A June 115 is 104. Yeah, I'd like the July. I like the July, and I'd probably do either the 115, 105. No, I like the 120, 110. I like the 120, 110. That's where I would land, 120, 110. It is up a little bit today. You could do this one for $3. I know it's kind of a stretch, but if you could do this one for $3, this is actually a pretty good trade. This is what this looks like, right? So this is where you'd be sitting. You have a break even at about 117 and change, 117.25 or so. On this, to me, that's a good place. It did get beat up a little bit, Walmart, on that earnings release. You can see it did get smashed pretty good, but I do see support down here. There are a couple of spots. It's actually a range. You could actually go down here all the way up to here and call this support here, and this looks like a pretty strong support zone in Walmart. And so that's kind of what I'm doing. That's what I'd be doing in Walmart. And then outside of that, I'm not really. Again, there's not much out there that's fairly interesting to me, honestly. And then when I go and look at like the one list that I like in here is the high option volume list, and I start ranking by like volatility in here. Most of the stuff that I see in here is all kind of this typical crap that's usually always on this list. Like Adobe. I mean, Adobe is not a tradable vehicle. It's not. It is. I think it gets like lousy. It says 3 stars. There's no way that's a 3-star liquidity. I have had enormous amount. And if you look, here's July. And if I was going to do anything, I wouldn't do it in June. But here's July, and then you just look up and down the option chain here, and you don't see a hell of a lot of open interest at these strikes. And that's troubling. And that's always been the issue with Adobe. And then you can see the spreads in here. They do tighten up at some point, but they are a little wide. And I don't know. I've had my issues with Adobe in trading the options. They're just not very liquid, and it's kind of a pain in the ass at times to get out of stuff. And that's like, you'll always be able to get in. I always tell people, like, you'll always be able to get in a trade and it'll seem easy. Try getting the fuck out sometimes. And when you start like trying to get out, and then like you're being quoted like on your trade, you're trying to get out, and you're being quoted $1 or $1.50 above mid price, and then you start playing with it, and then you start like reducing it to try and get it and buy it back cheaper, and then it turns out that it's just a fucking phantom quote. It's like doesn't exist because there's nobody on the other side to take your trade. And then again, I've had so many fucking problems with Adobe with that just be aware of that. You can always get into a trade. AMD, this thing has just been a absolute powerhouse, but with an IV rank of 8780, I don't know what you would do with this, because this is one of those stocks where, although it looks interesting and you have a really high IV rank and the thing's at all-time high, this is one of those stocks where I do not feel comfortable being short calls. And if I were going to do anything in here, I would likely want to short calls, because you're getting paid pretty well. I mean, even up here at 600, they're $10 wide up there in July. I don't know. To me, it's just not worth the risk of $800. As attractive as that trade is, to me, it's not worth. It's not worth the $800 that I would have to counterbalance this and sell some puts And if you did, let's say, an equal weight out of the range, inside the expected move, I mean, maybe something like that. AMD, I mean, that Ivy rank does have me kind of looking at this. Yeah, I mean, that Ivy rank definitely has me looking at this. And I guess what I'm looking at is that your risk here is not so much the profit. It's really those calls being kind of taken out, and then being in a situation where you're now forced to roll puts. I don't know, but I do like this. I actually do like this trade here. So it's the 600, 610, 370, 360. So inside the one standard deviation on the put side, and well outside the one standard deviation on the call side. And you're going to use 667. That's if you get it for 333. This actually going to be, no, it might not be priced that much different, but it is up about $15 this morning. Yeah. So anyway, there's that. And then we go down the list, and then I see CrowdStrike is on here. And that has had an incredible run. They do have earnings coming up in June. I see XLE is on here, but that is not really conducive to selling options. Like ETFs in general are very difficult. And then we still have NBIS on here, which has still been kind of a money printing machine as far as selling volatility. I see ExxonMobil is on there. Oracle. Oracle's been kind of a piece of crap. Cisco. There's a couple, I guess, just looking down a list. Micron, I'm not touching that thing. That thing's a beast. Intel, I see, is also up there as well as far as volatility, but that's another one short at your own risk. I see SanDisk up there. Service not so now. All right, and that's about it. I'm going about 23 minutes here, so I did throw out a few trades. Other than that, that's all I got. I'm not going to really ramble on much longer than this because, we're in a market where it is what it is. Trade them tight. I threw a few things out there, and I will be back tomorrow.